Morning, guys. Okay, so let's quickly have a look at what happened yesterday. And yeah, I'd apologize. I didn't really feel great yesterday. So yeah, I've been battling with some serious migraines and headaches the last couple of weeks. So it's been a frustrating time for me because then, when you're not feeling great, you can't trade. We don't hit the gym, certain rules. Otherwise, you're just going to make horrible decisions. On the line of making good decisions, I mean, I closed my long yesterday partially live with you guys, and that ended up being a really good move. Looked at all the bearishness out there, and happy I banked it. Where we're at right now is 118. So it's a chunkable retrace that we got. We went all the way back down to 116 at some stage. And yeah, so my leverage long exposure was drastically reduced, 117.2, I see. So happy with that one. And obviously the market sold off quite aggressively. I can definitely see there's a big uptick in everybody's, what's his name? What's the word I'm looking for? Apologize. Everybody's activity. Let's just leave it at that. Guys are getting busy. Guys are hustling, which is really good because it is a really good time to hustle. Now, I'm going to run a quick hypothetical pass by you, and then we'll take it from there. Okay. What if this is the beginnings? No, these new trading view tricks. Okay. What if this is the beginnings of this? Okay. And the hypothetical is as follows. What happened to these bottom levels? You can see the RSI went, we made lower low. We had divergence between these areas. The RSI started trending in the opposite direction than what price is doing. And seem to be hitting all the buttons on TradingView. I'm just going to make this a little bit bigger so it doesn't do that. So the hypothetical was at this stage, clear, strong bullish divergence. We got above the pivot. We tested it and then moon. Okay. So if that is the case, from a bearish point of view, there we had the same thou shall not cross scenario. So take it from the low to the high and apply strat 1. There you have your strat 1. There's your bear market bottom, TP1, TP2, TP3 if you want to try and trade this thing. But you get the idea, the same as the top. And the key takeaway from this is, if you look at this from a weekly cyclical point of view, once you see this, what does it do to your sentiment? You need to be bullish. And I have to say that I navigated Bitcoin extremely successful. I'm proud of my Bitcoin navigation this cycle round. And we're reaching the point. I'm not saying I'm bearish. I'm saying we're reaching the point where the possibilities for this is there again, meaning we're there kind of thing. And so me talking hope into you guys or into people on YouTube saying that I think it's getting time to consider buying is the same, carries the same weight as me talking risk with you guys and saying, I think it's time to start selling. Okay. Now, there is a few takeaways from this, and I did explain this in yesterday's YouTube video. I want to repeat it here so that you guys do have the, all the juice that comes with it. As this thing chops around in that area, it gave altcoins an opportunity to dump lower. Okay. We can test this theory if you want to. I don't want to take too much of your time, but it's for the sake of it, test the theory. So very simple. Draw the line there on this week. It was the 7th of November. Let's go to any altcoin for that matter. We can have a look at Cardano. Okay, so what do we have? 5th of June, where's November? Monday, December, there's November. Okay. 7 November. Okay. So I'm just going to stick to one example, but there you have it. So Bitcoin banged in a bottom and started building up. And what did Cardano do? It retraced an additional 25, in this instance, 30% lower than the close of that week. And that's the trap. So I was bullish on Bitcoin here, saying that Bitcoin was looking good because it did all the necessaries. But the alts, what people were holding, was still going down. So they were experiencing a different market than what Bitcoin was experiencing. Okay, frustratingly so. And this is exactly why I'm saying I'm not bearish, although I'm bearish on Bitcoin. We're sitting in that situation where this equivalent of what is happening, Bitcoin could be doing that right now. And we can have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Well, for the lack of this, all of this is still lower than that. I mean, you can say that, there was 50 bars, 50 weeks of more downside and hating being in Cardano while Bitcoin was at this stage running at 30,000 almost again. Okay. So that's the kind of thing that happens because they delayed. Bitcoin will start slowing down and they will start speeding up. And that creates the trap. That's how the trap engineers gets people in because Bitcoin was slowing down. Let's go back to BTC. Let's look when it slowed down. Bitcoin didn't make a significant higher high, locked in gains and moved to the moon since February in 2021. Let's go back to Cardano. Let's put a line in February 2021, April, March, February. Okay. Now, tell me, I'm saying to you, Bitcoin is bearish. Okay. And Cardano does this. How the hell am I right? I'm smoking something. There's something wrong with me. And that is the exact thing. This is how the market just screws with everybody. And that's how the market engineers, through everybody's participation, the complacency. So Bitcoin is no longer the thing. We can see the bearishness. You can see the warning signs. Things aren't looking good. And then all of a sudden, the alt does the opposite. And it creates that false safety net. And it's around that time that typically people start throwing out outlandish targets for these kind of coins. Okay, saying that things are going to go to the moon, we're going to fly, and you're going to retire in 2 more weeks. Just wait, and in 4 more years, you're going to be, this is the trajectory of Cardano because it's so valuable. Be careful about these things because what happens, and this is probably the last part of the mindset that I want to just put in there before I look at the trading side, is very simple. I have a little car wash. There's my roof. There's the car that sits. Oh, that's a very crooked car. But okay, there's the rear window. There's the tires. Okay, there's my little car wash. Okay, and this car wash lives in a neighborhood. Okay, there's the little street. Okay, and this is the neighborhood, and there's about 20 houses in this neighborhood. Okay, in this instance, 6. So if I had to put a dollar value on this car wash, keeping in mind the amount of cars that's there, it's easy to say that, okay, out of these 20 people, statistically, how many people go look at surveys, how many people let their cars get washed by washing themselves, what financial economical class they need to be in to do that, and you can get really methodical about this. But there you have it. That's the idea. This car wash now has a value. Now, let's say we did the math and that value equates to, if the car wash has got 100 shares, each share is worth $1. Okay, simple maths. And just keep it simple maths. $1. Now, some idiot on YouTube comes and tells you, listen, this development that generated these 20 houses, okay, is part of a 5-phase development, okay, which means the next phase is going to bring in an additional 20 or 5x that, okay? And if we then look at that, it means that this share price, currently sitting at $1, is low for the projected value. Okay. Now, who's those kind of influencers? Elio Trades. They do the math. They look at it from that point of view. No BIOS crypto. Okay. These kind of guys, they all have this kind of thing going for them. Hater, whatever, I don't care. Lady of crypto. She's got views, guys. She's got views, she's got ears. It's simple as that. Okay. Those kind of things, those kind of guys look at these things. Now, I know myself, I've been kind of falling behind with the shell sheet. I'll see to try and update that today. But this is what happens. This is what these guys do. That's their job. Okay. That's why people like them. Because if you can do the homework for me to try and mansplain this for me or what's going to happen, it's nice. So let's call this thing ADA. This is the name of my car wash. Great. So I bought ADA, and that's the idea. Now, if this is going to happen, this is a done deal. It's signed. It's going to happen. I need to buy ADA now at $1 because I'm going to 5x my money pretty soon. Okay, now this YouTube has got viewers, okay? And let's say this YouTube gets 50,000 views. And out of those 50,000 people, 500 people says, well, I think this is a great idea. And those 500 people go to the exchange where this 100 shares are traded, okay? And goes and tries and buys in on this at $1. What's going to happen? The liquidity is low. There's only 100 shares, small business. Liquidity is low. So at the moment, it's doing this. But because we can zoom in on TradingView, we can make any move look big, amplify any move. We can change the perspective of anything, no matter how we want this to look. Okay, flat line, man. Oh, there's nothing to worry. A little bump there, and then that's it. There's still far to go because this guy's saying it's $1. It's going to go to $5. So we're looking at $5, and then what if this thing goes to $25? That kind of thing. Okay, so this is the catch, complacency catch that I want to warn you guys about. Okay. So now what happens is because low liquidity and perspectives, and these guys didn't do the homework. They just looked at this thing from pure common sense time. What this guy's saying makes sense. It makes sense to us all. This is what happens. Price goes up. Tomorrow, this guy makes another video celebrating what a genius he is. Okay. I'm a genius. I'm the king of crypto. I am the best. Gets another 55,000 views. Okay. 500 people vouch for how cool he is. And now 5K wants in on the deal. It's up $1. It's up $2 already, or $4 for that matter. Okay. But there's not a lot of shares going around, floating around. Now that share goes like this. And we're sitting at $10 a share. Right. And this keeps on happening, rinse and repeat, up until a point where it starts slowing down. Why? Because although this guy is still the king of crypto, everybody loves him. He's getting maybe now 150K views. The amount of people that can buy is close to zero. Why? Because they all bought already. If there's no new liquidity entering, what can the thing do? Go down. Now, is there any, at this stage, and this is the question that I always ask everybody, is there any tangible evidence that the current price at which it's valuated is directly linked to what is happening in real life? No, because in order to get these 5 extensions or phases, it's going to take, say, 5 cycles. Why? You don't just open a development overnight. It's going to happen, but it takes time. More people need to come to the town, and it's just the nature of things. And then what happens is, because this thing is so inflated, it starts doing this. And because there was a few that bought there, but the majority bought there, that's why the volume goes up, okay? Everybody in this video is basically trapped within the upper 20% of this range. And if it does this, they draw down. And because they don't understand that this takes time, this is a very simple example. So, we understand this, but when you look at something that's not tangible, like a blockchain and the business and all the data that they're providing to people, it's very hard to quantify this. Simple, right? I know, okay? So because they don't understand this, what happens is they start selling out of panic. Brings price right back down. And while that happens, they blame this thing. You piece of shit. Why? Because this guy was right. All these guys make money. What did this guy do wrong? And that's where news comes in. Okay? Because news is the excuse. We need to not have it being our fault, because we didn't start off with taking responsibility doing the research. We were watching this guy. Okay, so by this definition, the way that we're going about investing, there has to be somebody to blame. So Ada maybe skips on has a bad meeting or something like that, and that's the excuse for the dump. So when we look at this, and we look at what happened yesterday, and Max, you always ask this, what's the reason for the dump? Okay, there is no reason. I can't remember where did you post there. Did anyone find out what's the narrative for the dump? Now, as I always say, this is BS because nobody knows the news at the same time. We saw it in the charts. Show me the charts, I'll tell you the news. But if the narrative, which is correct, becomes cemented into people's sentiment, okay, the CEO was found out that he maybe laundered money or something like this for a crime boss. Okay. If that cements in, no matter what marketing comes away, all these people are going to vacate this stock. And because it has a lot of momentum, those guys, the original people that were shareholders, they're also going to get out because now the optics looks bad for future upside. Okay? That's news for you. So the question that I'm asking you right now, after I've explained this to you, is where we at this given stage? How does the crypto optics look like? It's open to perception. You need to make the decision for yourself, okay? And personally, for me, the optics still good. So this dump being the dump that we have at this stage, being the retrace that we're experiencing here. For Bitcoin, let's maybe go to Bitcoin because that's the argument. Has not changed the optics yet. People are blaming bad figures and. But at some stage, that will have a string to it. and another string to it. And then there will be a sea of things going wrong. BlackRock gets fined and sued for malpractice, or, because these were the optics that drove the price to the upside. The same optics will then obviously then kind of drive price to the downside to create the bargain. So that's the reason, although I'm saying to you guys 4 hour, I think it's bearish and it's going to go down, the optics on this is still good. So we don't have to, abandon everything. You just need to understand that where we're at right now, we're running close to out of time. Okay. Hope that makes sense. Drop a comment. Tell me what you think, where you're at, and then we'll take things further from that point regarding the crypto coins. Okay. Now, this is market tactics. We want to trade for a living. So these things do impact. And if the optics, which I think is still good, it means that when we look at Bitcoin, not in the weekly time frame, this chart, not in the daily time frame, because we're range bound in the daily. I said that now, look at this, still range bound. We're moving back into the chop range. We're below divergence pivot. So 119 is probably going to be resistance. These kind of things. We created a range low, not so recent ago. So we need to go test that range low and those kind of things. This kind of bad optics, short-term bad optics, could then set the trend or the tide for us for our trade direction, which in my opinion now should be bearish. Okay. Now, if we look at this 4 hour analysis, and I use the Elliott wave for the YouTube guys because it's simple for beginners just to follow. Okay. If this is a fall, what needs to happen? You need to go make hidden bullish divergence before we can go and try and sweep a higher high. And statistically, if this is the case, where is the continuation? We're right in that range. So if we want to build for a new high, this is the area for that to happen. So a little bit more downside over the weekend, chop around, could create what is a CME gap for us to Monday then drive back into. Once we start getting CMEs over CMEs of CMEs, it just confirms that we are range bound. And then we could potentially see a little bit of a 5. And why is that the case? Because the altcoins will at this stage probably be looking like this. Look at that. There's nothing scary about this for Ethereum, though, considering all the massive gains that it had. But the guy that's buying in now, he's not had all this gains. So for him, a pullback to that is going to be horrendous, 15%. Okay. So there you have it, guys. So sentiment, all the other stuff that goes with that, Bitcoin trading, you get where I'm at with this. So I want to be bullish. And although we did bounce at the right area, we didn't have the divergence. So I'm always looking for 3 things. Okay. 1, you want to know what is happening with the trend. Okay. Many ways we can do that. You can look at a trend line. You can look at Elliott wave count, whatever the case might be. The trend is what? Still up. Okay. We're making higher lows. We're making higher lows. It's still up. Okay. I can put a line wherever I wanted. Now it's a bullish trend again. I can put a line there and say we broke trend. That's why it's one part of what it is you need to look at. Okay. But the trend is up. We're not moving downwards. Okay. Another way you can do that is you can use the body indicator, or you can use moving averages, or whatever the case might be. What works for you? Okay. Second thing is, and this is the harder one, is momentum. Now, momentum can show itself in different ways. The momentum that I look for is divergences. The reason being is it's when momentum changes. So even if we have massive sell-offs, if we can make strong bullish divergence or stuff like that, it shows you that this momentum is not sustainable. and the market's going to correct itself again. And that's what you want to do. So it's an uptrend with bullish momentum coming in. That's a good sign. And this is bearish momentum. Other than that, it's an uptrend, but there's divergence and we're losing speed. So there's bearish momentum entering. This is the first sign of just that, turning of a tide. Doesn't mean there can't be a higher high later in the future. So the shorter time frame trend says, okay, momentum needs to come in for me to say that, okay, the trend's still up, there's still momentum, and we could potentially still do this. Why? Because Elliott wave has got certain wave rules. It says we can't fall below 1. And so there's an assumption, a fair assumption, that we could potentially do this, or at least go test the axis. Because we got above the axis, made a high, now we need to test before we can leave the range. Okay, that's it. So I'm waiting a little bit more for this, which means that somewhere within this area, I would rather want to try and short the market, because the optics still looks good and people are not looking at it like this. So I would want to try and do this to try and get the market in there. So that's the idea. Right. Then the third and final thing, and I've basically already given you the answer there, is the structure. Okay. So now you've identified the trend, you've identified momentum, and now you're looking at the structure. Now, there's many ways that one can argue what would be the structure in this instance, okay? For me, the simplest way for you guys to kind of put this in is, are you going to use strat 1 or strat 5, strat 4, strat 2, whatever the case might be? Because that's your analysis of the structure. The structure only comes after we have identified the trend, the momentum, and then we apply the structure. It's the parameters within where we trade, okay? That's it. And given that now, if we look at the structure on the 4-hour, the parameters is that we're looking for a test of lows, and then we want to try and drive this thing in a higher high. And if that is the case, then we want to go to the 15-minute and try and look for what would then be potentially a little bit more upside, so that we can do a little bit more downside, so that we can go make our new all-time high. Okay, and that's the game plan. And that's why I tend to want to try and just keep things simple for myself around these kind of analysis. Otherwise, if you overcomplicate things too much. So what do we have on the 15-minute? Got upward momentum, go long. Okay, don't trade against the market. Go long because there's an imbalance thing right there. The market's going to go there, guys. We're going to go back to 119. If we get there, we will probably on the higher time frame have hidden bearish divergence. We've already made a lower low. And if that is the case, then you short the thing. And then hidden bearish divergence can fail. And then this was the real bottom. And then, oh shit, sorry. Just like what happened to me on the 4-hour. And then that's it. It's one of those things. There's no guarantees in this. All this smart ass talking doesn't confirm or doesn't guarantee the outcome. But it gives you enough way to reason yourself through this, because if you were going along there and it dumped there and you went short there and then it pumped there, those kind of things, it's buying a bottom doesn't necessarily help, so that's the kind of stuff that just screws you over mentally. So yeah, that's it. That's my spiel for today. Thanks for watching my rant, listening to me ranting. Thanks so much, guys. You have a lovely day. I will post some setups. As I always say, the setups I post is stuff I take. If I'm not trading, there's no setups in that sense, and I'm not feeling 100. I so want to trade this, but I'm not feeling too good. Cheers, guys.